Traders. This is how to find the big boys targets. It's about how to be a target trader instead of a scalper. So this is lesson 1, and it's why you need to have the paradigm shift first. All right. So there's a disclaimer. I'm not going to read it, and it's actually not going to put it on the rest of the 7 lessons. But there it is for you to know that's there. So it's time for a new strategy, all right? We need a paradigm shift. What is a paradigm shift? A paradigm shift is an important change that happens when the usual way of thinking about or doing something is replaced by a new and different way.
Hey guys, this is Scott Barkley. I'm one of the founders of ProAct Traders. We're a company that's been in business since 2004. Started out as a charting company, and it became very obvious that we need an educational component. So today we're a charting company and educational company in the Forex. Now, this video you're about to watch is all about why you need to become a target trader, all right? There are many ways to trade the Forex, and we'll show you some of those, but the number one way to be consistently successful in the Forex is to become a target trader. And the reason for that is that's what the big boys do. You want to trade with the big boys. Anything else that you're doing is trading counter to the big boys. So we're going to go into the charts right now. I'm going to show you why you need to become a target trader. So hang on, we'll be right there.
Okay, here's the question. Why be a Forex target trader? And 3 words come to mind: success, consistency, and confidence. There's the disclaimer. I'm not going to read it, but there it is. Okay. So let's start with the probability of being a successful trader the way that most traders trade. So this is an Excel spreadsheet that we developed to illustrate what happens when you do not target trade. So, you know, when I was a consultant with FXDD, I was a trading consultant. I was in the pits one day, and I asked them, I said, hey, what does the average retail trader get in a winning trade? And they told me it was 5 to 8 pips. So this Excel spreadsheet shows you that you have, right now we have 30 pip stops. Now that's just an average, right? And when you're trading for 5 pips, okay, right here, you do not show a profit unless you are 90% correct. If you trade 100 trades, you have to trade 90 of them with profit, because the 10 losses you have will wipe out any gains you have. So you can't be successful trading for 5 to 8 pips. It's just not possible at all. So let's just change this to 30 pips, so that we have a 1-for-1 risk to reward ratio. Now at 1-to-1, you have at 50%, you will break even. So if you make 100 trades and you trade at 51%, you can show an increase in your margin account. All right, but we're never trading for that 30 pips. We're always looking for 55 pips or more. All right, so you can quickly see here that at 55 pips, you only have to be 40% right, and you can still show an increase in your margin account. But watch what happens when you increase your skill level from 40 to 50%. You can see your pip capture in terms of money goes from $40 to $125. That's a 300% increase in the amount of money you put into your account. All right. So what you want to do is you want to stack the deck where you only have to be 40% right instead of 90%. But unfortunately, very few traders trade that way if you're a retail trader. So it's time for a new strategy, all right? We need a paradigm shift. What is a paradigm shift? It's an important change that happens when the usual way of thinking about or doing something is replaced by a new and different way, okay? So we are target traders. We target trade. We find the targets that are 55 pips or more away, and that is the way to success. You now only have to be 40% right, and if you can get your skill level up at 65, 70, 75, 80%, you can make all the money you need to. All right, so why? You need to learn the why of the market, not the how. Anybody can learn the how. It's the why of the market that will make you a trader. So let's view this practically. The different structures require different strategies. What do I mean by different structures? Okay, well, sometimes the market's just junky and it kind of looks like that. Sometimes it's neat and orderly, and it kind of looks like that. Sometimes there's no clear-cut path through the jungle, and it looks like that. Sometimes we need to run, and it looks like that. Sometimes the market is reversing, and it looks like that. And sometimes the market's just going up and down, up and down, up and down, and it looks like that. Structure is the key to finding opportunities, and margin management is the key to managing them once you have an opportunity and you have executed. So you must create a plan for risk and reward, the final criteria for pushing the button. It's not some silly indicator turned over. We trade probability, and a trader must know the statistical probability of their trade opportunity within the current structure. Now, the Forex is complex, but it's not complicated. There is no rocket science here, all right? Each piece is easily understandable, but it takes time to assimilate the information and turn it into a workable plan. In other words, you can't learn the Forex in 3 weeks, so just get it out of your head, all right? If you try and Google it, do you even know how to phrase the question to get the correct answer, all right? So most traders will try to Google learn to trade, and they'll definitely, without a doubt, happen to me and everybody I know, we got wrong information along the way, and that had to be purged as we learned a better way to do it. Now, the market is not random. It is manipulated by the big boys. As you can see on this illustration, every single car or truck or SUV on this freeway is a random thing, all right? But the freeway is not random. They are all directionally going the same way. That's similar to what happens with candles. The candles could be random, but the structure is not. As you see, they are building a phenomenal structure to get to where the big boys' agenda is. So, who are those big boys? Okay, over 62% of all worldwide FX order flow is handled by just 6 banks in London, right? If you take the top 15 big boys, that equals 78%. So when you look at a chart, 78% of everything you see has been put on that chart by a big boy. And then the follow-through comes from the 500 to 800 banks who execute speculative trades based on the market structure evident in the charts. What is the structure the Tier 1 bankers created? Okay, that has a higher statistical probability of happening if it is consistent with the Tier 1 bankers' agenda. All right, and some of these banks allocate between 20 and 30% of their funds in the Forex, and they generate 40 to 60% of their profits from trading currencies. Wow. It starts with market structure. What is the big boy structure for the pair? All right. So the market only trends 30% of the time. That's max. Right now it's only trending about 2% of the time. All right. 70% of the time it is ranging and or reversing. And a trader needs to be able to recognize which structure is in play and then have a particular trade setup that they can use in that structure. And to be successful, you must be consistent. What is consistency? For a trader to be consistent, they must find one trade setup that they can consistently recognize, consistently execute on a currency pair that could consistently show that structure and opportunity. All right? It is precision trading to a known target that is 55 pips or more away, what we call trading in the wide open spaces. And because of that, we only need to be 40% right because we've stacked the deck in our favor. All right, so I'm going to show you a couple examples. Last month, this was our real estate of the month trade, and we identified this trade for traders right here, and this is the actual picture we took before. All right, and this is what we envisioned that it might possibly do. All right, so what did it end up doing? Very similar, not the same, but very similar. And what did they end up doing? Our traders, some of them made over 2,600 pips on that trade alone. All right. So here's an intraday trade of the British pound just going to the ATR target. The ATR is something you need to know every single day, and it goes to the pip and turned up. Now, if you didn't know where that ATR target was and you did move your stop, you gave it all back. It's important to understand the structure and how the market makers are going to make the market move. Here's another intraday trade, okay? It's a trade where we press our winners without exception. Trade 1 is above the fib. Trade 2 is here to the fib, to a target, 55 pips in a wide open space or more, all right? What is the holy grail in trading? It is not some silly indicator. It is pressing your winners without exception. What does this mean? Okay, that means that every time you take a loss, you never got to add to that position since the trade did not go as planned. You take a loss on one position, but every time you win, you have 2 or more wins. And that means that you're always overcoming your loss by a factor of 1 or more. And this is sustainability. It is the key to success in the Forex. It can be learned. It's a learned skill. Target trading. The benefit to learning target trading is that you will understand the why of the market and be able to capitalize on the big boys' market moves as they do 78% of what they're doing in the charts. All right, you can learn the methodology that the big boys use daily in the market. And here's the deal: if you're not trading with the big boys, then you're trading against them. Ultimately, you can become a competent, consistent, and profitable Forex trader. What is that worth? Well, it's priceless. Hope that helps you.